And at some point, the Fed will say, okay, we got to stop. We got to maybe start going back to easing policy. Who knows when this is going to happen, even though I'm going to ask you that question in a moment. But even if the Fed says, okay, we're pausing, we're now going to start easing, you have this, long lag of all the Fed hikes and the QT going on, that you're going to still continue to tighten monetary policy for a good while, even while the Fed is out there now back to easing. The tanker's still turning to starboard, and it's only going to be a while before it can start swinging back again. So that's when you were talking about kind of back in the 70s, where you had these periods where, they'd start easing again and whatnot, but the markets would keep going down because they have to reflect all of that, economic destruction, demand destruction, et cetera, that all the pent up hiking had done. So I see you nodding a little bit as I'm saying this, but do you sort of see that as sort of the likely future trajectory here, that the Fed is going to hike until something spooks it or it breaks something, and it then starts to reverse course, but we're going to have this intermediate period that could last for quite a while, where all the impact of all the tightening in QT is still going to keep sort of slamming into the slowing economy here, and it's going to be a long time before those, I guess where I'm going, this is a lot of folks think, oh, well, the Fed will pivot and then everything will magically go back to where it was, back when times were great over the past decade, where asset prices just shot the moon. That might not be the case. You might get your pivot, but you might not get the results you expect for a long time after that.
Yeah, so right now, of course, the next Fed meeting is here in September, and there's chatter about 50 basis point rate hikes or 75 basis point rate hikes. Frankly, I don't think it matters. I may be out of consensus here. It may matter in the short term. There will always be an opportunity to chase something, right? That is perceived as relief, right? That's why bear markets, you cannot be perma anything in a bear market. I think you need to be perma flexible in a bear market, because you will get these vicious rallies. And when the technicals, and that's what we pivot off mostly, when technicals align to be bullish, then you definitely want to chase these things at the right time. You don't want to chase them early and get your head ripped off. I mean, it's a complex game. So I have no doubt if the Fed were to go 50 basis points in September, then and maybe queuing off another relief print in CPI and PPI, then that may set up for another rally. Absolutely. I mean, nothing's going to go straight down. And as we just saw this summer, these things can be immensely powerful, especially if positioning is skewed too much one way or the other. Mm-hmm. But the reason I say it doesn't change anything is, as you said, then the tightening and the lag effect is still going to be there. In fact, right now, you look at what Powell said on Friday. That's nice in terms of being now saying, okay, I'm actually serious. Listen to me. Can you hear me now? But he has to follow through with action. So you can argue then he's put himself in kind of a box here as well, because if he does not follow through, i.e. with 75 basis point, it may be another credibility issue. At some point, the Fed will pause. They will have to pause. And by the way, just everybody be clear, history is also clear. The Fed always raises rates until it breaks something.
Right.
That's how it works. That's how, they raised rates until we had the housing crash. They raised rates until the market told them don't do it anymore in 2018, right? Greenspan raised rates after the Y2K bubble, and everything blew up. It's always the same story. The question is, how much pain are they willing to take, and how long can this financial construct handle itself without any major blowups? And frankly, this was very interesting in the first half of the year. While we had some significant down moves in equity markets and individual stocks, there were no major blowups. That was actually a solid,
pretty orderly.
It was very orderly, especially talking about the VIX, because while the S&P made lower lows, the VIX also made lower highs. That was a little odd, right? And some associated with the options complex, which obviously these days is massively powerful. But at the beginning of the year, January, I had put out this notion about how the Fed maybe want to approach the year. And I said at the time, yeah, they need to let the air out of the asset bubble, let assets drop for once, but do it in a way so that it doesn't cause anything systemic, right? And then when inflation rolls over, as growth will be slowing down, because every time asset prices drop, growth slows down. The equity market, it's always been said stock market's not the economy and vice versa. Well, the stock market has become so large with so much wealth tied to the stock market that it directly correlates with spending. Bernanke talked about this in 2012 as well. Everybody feels good when the stock market goes up, their 401ks are high, so they're going to feel more comfortable spending things. We saw that also in 2018 in December when they dropped 20%, retail sales cratered immediately, right? So there is actually a correlation.
Right.
So
there's a wealth effect and there's a negative wealth effect.
That's right. And so now when we had the summer rally, all of a sudden you get the wealth effect back, right? So now you can expect maybe a bounce again in spending, which is again counter to the Fed's mission about getting back to 2% inflation. And there's a lot of things they do not control on the inflation equation, right? That's the tricky part. And we see that in Europe with energy prices, a lot of which is political driven, geopolitical driven.
Right.
So yeah, I don't think it's going to be an easy journey at all. But yes, you're going to have rallies. You can chase things when it makes sense, but there's also times to sell and not be as aggressive. Absolutely.
If you enjoyed this video clip, click here to watch another one you should like.